Hi, friends. Thanks for downloading the Money Girl podcast. I'm Laura Adams. Making a charitable contribution is always good for the soul, but did you know that it can also be good for your wallet? A reader named Lori asks, I purchased a painting from a nonprofit foundation. Later, I received a letter stating that the profits of the sale will benefit the organization. Does that mean that my purchase is tax-deductible? If you're like Lori, you've probably purchased something from a charity or made a donation to a nonprofit organization and then wondered if you should claim it on your taxes. In this episode, I'll tell you what kinds of donations and purchases are tax-deductible so you never miss a money-saving tax break. Most contributions of money or property that you make to a qualified organization are tax-deductible. That means you can subtract them from your taxable income, which reduces the amount of tax you have to pay. While this tax perk sounds fantastic, there's a hurdle you have to jump over to qualify for it. Charitable contributions are deductible only when you itemize deductions on Schedule A of Form 1040, instead of claiming the standard deduction on your taxes. Taking the standard deduction is always easier than itemizing deductions. However, for about 1 out of every 4 taxpayers, itemizing results in a lower tax bill. So get familiar with all the deductible expenses on Schedule A, like mortgage interest, unreimbursed expenses for your job, medical expenses, and charitable donations. Then keep track of them throughout the year, so itemizing may be an option for you at tax time. If the total of all your deductible expenses is higher than the no questions asked standard deduction, you'll come out ahead by itemizing. For 2013, here are the standard numbers by tax filing status that you'll need to beat in order to make itemizing pay off. The standard deduction for single taxpayers is $6,100. If you're married and filing jointly, it's $12,200. For head of household, it's $8,950. And if you're married but file taxes separately, it's $6,100. There are even higher standard deductions for those who are 65 or older or blind. Now that you know that itemizing deductions is required for a charitable contribution to cut your tax bill, let's discuss what types of charitable contributions are tax-deductible. Donating cash to a charity is a straightforward, allowable deduction. But where things get muddy is when you purchase something that benefits a charity, like raffle tickets, a silent auction item, or artwork, like Lori did. When you receive something in return for making a charitable donation, you can only deduct the amount that exceeds the fair market value of the benefit received. For example, let's say your child's school is raising funds for a field trip. They're selling raffle tickets for a chance to win a day at the spa, valued at $250. You buy $100 worth of raffle tickets and win. Since the prize is worth more than you paid, the raffle tickets are not tax-deductible. But if you paid $300 for raffle tickets and won the prize valued at $250, you could claim the additional $50 as deductible. Likewise, if you didn't win the prize, the entire amount paid to the school for raffle tickets would be deductible. So Lori must compare what she paid for the artwork against its estimated fair market value. But how do you do that? Well, a qualified organization must give you a written statement if you make a payment of more than $75 that's partly a contribution and partly for goods and services. It must give you a good faith valuation of what you bought and explain that you can only deduct the amount you paid that exceeds it. What about if you donate personal belongings to a charity, like clothes or household goods? Well, in that case, you also need to estimate their fair market value for tax purposes. And by the way, they must be in good use condition or better to qualify as an allowable deduction. There's no set formula to calculate fair market value for inexpensive items, but it's usually far less than the retail price. Consider what an item would probably sell for on sites like eBay or Craigslist, or in a consignment or thrift shop in its current condition. If the property you donate is valuable or unique in some way, be sure to refer to IRS Publication 561 called Determining the Value of Donated Property for more information. No matter if your contribution is cash, check, or property, you must keep a record that includes the name of the organization, the date of the contribution, and the amount. For a contribution of $250 or more, you also need written acknowledgement from the organization that describes your donation, including a good faith estimate of its value. For a contribution to be tax-deductible, it must be made payable to a qualified organization, never to an individual. Qualified charities include a wide variety of organizations, including schools, religious organizations, veterans groups, fraternal societies, and government branches. To see a full list or check the status of a specific organization, use the Exempt Organizations Select Check tool at irs.gov. I'll include a link in the transcript for this show on the Money Girl page at quickanddirtytips.com. For more information about making large donations, refer to IRS Publication 526 called Charitable Contributions, or get advice from a qualified tax accountant. To read a transcript of this show, connect with me on Facebook, Twitter, or Google+. Visit the newly redesigned Money Girl page at quickanddirtytips.com. Just look for episode number 330 called What Charitable Contributions Are Tax-Deductible? I'm glad you're listening. Cha-ching! That's all for now. Courtesy of Money Girl, your guide to a richer life.